I used to think that by working in a bank, I could help people with their finances. That was until I learned that banks are a business and their inventory is money. So the more money they have, the more money they can actually use to earn interest and earn money on your money. Now, to work at a bank, for most of the employees there's really no formal education needed to actually work there. Only once I invested the time to actually become a licensed financial professional did I actually learn most of these things. And the biggest one when it comes to banks is that banks work on ratios. Usually it's 1 to 10. I've seen as high as 1 to 20. This means for every dollar that a bank has, they can then lend out $10. So this means that if you have $100,000 in the bank, they can then times that by 10. So now they have $1 million. So you have $100,000 in the bank account. The bank now has $1 million. If you just have that $100,000 in the bank for 10 years, so 10 years, then the bank only earns 3%. So they've inflated it to $1 million. Your 100,000 is now $1 million, and they're only getting 3%. We know they're getting more than 3%, but let's just say they only got 3%. After 10 years, the bank would now have $1.3 million instead of just $1 million. So from your $100,000, the bank, over just 10 years, the bank has now made $343,000 if they only earn 3%. This is why it's so important to learn how the wealthy become and stay wealthy, because the wealthy do not keep their money in bank accounts because they know that banks are profiting off of the money that's kept inside them.